this risk warning in your mind always, and to keep in your mind the possibility of having profit. Because when you learn some things which I'm about to teach you right now, you will feel that you know too much and you can predict the market. And actually, you can predict the market most of the time. But when the rainy day come, when you like have some bad day, you will try to fight this idea. It's just a possibility. Okay. So keep in mind, whatever you are doing, winning or losing, you're just witnessing the possibility. I will assume that everyone here is starting from scratch, and I try quickly in like less than 15 minutes summarize everything I know about Forex trading to you. So starting with the introduction of what is FX or Forex. The word itself is FX or Forex, meaning Forex exchange. This will be like 9 main topics. Every like 2 or 3 minutes, I will stop and take question if you have. This means buying and selling the currencies and trying to get profit from them. Okay. So as any market in the world, if you buy some commodity, if you buy gold, if you buy corn, if you buy a toy, anything you buy and appreciate, like the price go higher, you make profit. If this thing you buy like a house or a car decrease in value, in price, you make a loss. This is simply the rule of supply and demand. Whatever you are buying or selling, it's in a market where buyer and seller are bidding against each other. Everyone is trying to buy, everyone is trying to sell. So the market tries to find a balance between both buyer and seller, and this is the price. That's why prices actually move, because of this buying and selling pressure. So in the FX market, you can see this happening second by second, but this is actually happening in every place, even in your local market. Yeah, the local, very simple vegetable market have the same concept. So keep this in mind. You are in a very big market, but have the same concept of supply and demand. And if supply is more, the price will go down. If demand is more, the price will go up. So, for example, we have a very popular bear. When I say bear, because currencies actually cannot be defined by one currency. For example, here I'm in the UAE. If I go to an exchange and say, how much is that US dollar? He will assume that I'm asking about the US dollar price against the dirham, the UAE dirham. If I'm in other country, he will assume that I'm asking about the dollar against the local currency. But if I'm in a global market like this, I have to define what currency I'm trying to buy and what's the currency I'm giving or selling in exchange. So like the most liquid currency is the euro against the dollar. Okay. So for example, the euro dollar rate can be like 1.010, for example. This meaning you are paying $1.10 to get €1. So if you see my screen, the euro is in the left and the dollar is in the right. So whatever you see in the left, you are buying when you click buy. Whatever you see in the right, this is what you are selling or giving in exchange for the whatever in the left, the base currency. So this is very basic stuff, but you need to know it first. So this market, I told you it's like any market, but it has some unique features. The first feature is it's not centralized market. There is no place that we call the Forex market. Like you can go like for the car dealer shop. This is the market. This is where the place are. You can go to the New York exchange market or the UAE exchange, Dubai, for example, financial market or exchange. You can go to this place. You can knock on the door and enter inside. But the Forex market, there is no place. It's just the connection between banks all over the place, all over the planet. So there is no place that we can like enter in or see. The Forex market is actually the wire transfers that's happening every second between central banks around the world. Because we are in a global market, so there is a very high volatility. People are buying and selling with billions every second. So this is the second thing you have to know. This is a very high volatile market. So how this happened? How we came to this point of Forex market, and we can buy and sell with our computers or phones? How this happened? Actually, the story started from very, very old ages, but I will just start from very recent 1870, the year 1870. Yeah, it's very near. So this is where we had something called gold standard. Okay, can someone tell me why gold is very important for every person in the planet? Why it's very important? Can someone answer this question? Actually, gold is just a shiny rock. That's it. It's a shiny rock. It has nothing. It has no value. Like if you are at home and you want to have like dinner, you cannot eat gold. But its value coming from the trust it has. You can exchange gold to everything. For example, I can go to any country with gold and give this gold in exchange of food or clothes or a car or a house. Everyone would accept this. And this has a history. It was always like this. People accept gold, and actually silver was the same. Now silver is like less in price, but it has the same acceptance or value. So because gold is accepted globally, every human being accept gold, we made something that we call a gold standard. Meaning, instead of me buying the house or the fancy car I want with like a very big amount of gold, I just have a certificate, a paper that say this man owns this amount of gold. So if I want to purchase something, I go to another person and we make a trade. I'll give you this uh, uh, paper, which has a guarantee that you can have the gold, and in exchange you give me. By time, it became currency. Okay, in your country, the currency you have, it's just a paper. Here in UAE, the dirham, it's just a paper, but it has a promise. The paper itself doesn't have any value. It has a promise that this person in this country is guaranteed by the government of this country to exchange the paper with value. But this paper was backed up by gold until 1870. Then we had something which we call the Bretton Woods Agreement. It was in 1944. This was from the US. Simply it says, guys, okay, you don't have enough gold. I have enough gold. So I will give you my US dollar, and I will guarantee you whenever you want to get back a gold with the dollar, I will give you the gold. This is meaning like fixing the gold price against the US dollar. That was in 1944. Then 1971, the US said, surprise, I will not give you gold anymore in exchange of the dollar. So what happened in this second, and what's still happening until now, is gold prices are fluctuating, and all the currencies are moving against each other, depending on the same simple concept of supply and demand. Whenever people want like the dollar more, it like increase in value. Whenever people want the Japanese yen more, it increase in value. And this is against each other. So for example, dollar is very strong. Japanese yen is very strong, but against each other, there is a ratio. And this is what you see in the market. So you have to understand that before you get in the market, that why this is moving. This is just papers. But this paper represents the economy that back this paper up. When you hold a Japanese yen, you're holding a promise from Bank of Japan that whoever has this paper, we owe him. We can give him in exchange for this paper, whatever goods or value equal to this. Then in 1999, we had what we call the digital revolution, which is like having the ability to buy and sell from home. I don't like to say my age, but I'm like like about 40. So maybe if you are about my age, you had some time without the internet. Okay, so without internet, there was nothing you can do. You cannot buy or sell from the global market. But 1999, the FX market was like in a revolution because everyone, everywhere can buy or sell. So from this moment on, everything changed. So now everybody is trying to trade on FX. But why? There is a lot of advantage. First, there is liquidity. I remember vividly when I started like learning about stock market and started trading, I had a great trade. I bought a stock, it appreciated in price. I was like in a very good profit, around like 20% profit. And I went like very happy to the stock market to sell it. I gave the permission from my broker to sell because, you know, in stock market, you cannot sell it yourself. Like back then, there was no like system. You have to do it through phone and broker. So he said, very strange word. Nobody is buying. Like, what? I want to sell. Just a share. I want to sell it. Like, you have to have someone buying whatever you sell. This, I remember this vividly. In Forex market, you will never have this. Whenever you want to buy, someone else is selling. Whenever you want to sell, someone is buying. That we call liquidity. Like imagine like your phone or your car, you are trying to sell it, or your home, or your house. You want to buy a new house, so you want to sell this one. You have to find buyer, right? In this market, no. Whenever like woke up 3 a.m., click buy gold, you will find the broker like giving you the gold. Sell it, it will just accept. This is high liquidity. This is the also very easy access, 24 hours. It's 24 hours because it's global. When it's like here in Dubai, it's about to be 5:30 p.m. It's now starting in early morning in the US. And then after like 7 or 9 minutes, hours, it will be starting in Sydney. Then after that, so whole global is trading. So it's 24 hours market. Also, the third and most important thing is leverage. If you like forget everything I said today, if you didn't focus, if you are just now having a PlayStation game, just focus with me in this minute. Leverage is the very best advantage in this market, and this is the most dangerous weapon that can kill you. Leverage. Because with leverage, you can maximize your profit and also you can maximize your loss. Leverage simply means whatever you have in your account is multiplied by a number, and this number is leverage. I'm giving you, as a broker, I'm giving you purchase power as the number of leverage. So for example, if your leverage is 100, meaning each dollar you have in your account, I'm giving you the ability to buy $100. So if you have $1,000 account, you can buy $100,000 worth of currency. So this will maximize the profit and also the risk. We will come to this later. I don't want to waste more time. Maybe we'll go to some live later. And also we can diversify your, this is not, okay, it's of course, you can trade with very low cost in this market. Like if some of you traded in like old stock market, it used to be like very expensive. You pay a lot of commission. You can be in profit and lose everything for the commission. Here it's very, very low. I think also in Godo, there's like a zero spread account. So this is also something very advantage. So we want to understand who actually buy and sell in this market. Central banks. This is the first. In your country or here in the UAE or in any country, there is a central bank. The central bank is trying to manage whatever other banks is doing, and this banks locally trying to communicate with you. You are now, for example, traveling to Europe. So you buy euro, it gives you euro. The price is going higher because you want it more, you are selling your local currency, and that's vice versa. So central banks around the world are trying to provide the currencies. So they buy and sell, not to make profit, but to provide the clients who already having an account and have money there, but they want to change the currency from this to this. So the first and biggest players in this market are the central banks. Also, we have something we call financial institutions. This is also banks, but Sometimes they trade in the Forex market. They buy and sell because they think, as you and me will do later, how this will affect the market, what's happening right now, how it will affect the market. We think that the dollar will go up, so let's buy more up. The gold will go up, so let's buy more gold. This actually happened by all central banks. If you can see gold prices right now, while we speak, hitting all-time high. One of the reasons of this is the central bank, especially from China, buying like massive amounts of gold. Okay, so we have also corporation having also some speculation, and also trying to hedge. Like for example, someone is manufacturing and exporting some goods, and he will receive this with another currency. So to avoid any like volatility, he can get into the FX market to hedge. So he receiving this, he will buy it here in the market. So any depreciation, he will be hedging it. And lastly, the retail traders. It's us. Hear me, my friend. You are a very small fish in a very vast ocean. I'm saying this to you and to me with total respect. I'm saying this to you so you know, like whenever you have this stop loss or whenever you have this trade is not going to your way, friend, nobody is seeing what you are going through. Nobody. It's just you get into the like wrong moment. And also when you're getting profit, nobody's seeing you. So this is an opportunity. You are in a market where you can get profit and no one can take it from you. Okay? So, but you have to know your like size in this vast market. So markets start from the Sydney, which is around 10 p.m. GMT. Tokyo start at 12, then London session 8 a.m. This will be around 12 p.m. Dubai time. I'm not sure what's the difference time between here and Bangladesh. We are in advance 2 hours or they are in advance? It's 7:30 there. Okay. So around 2 with your time, you will have the London session. And around 7, you will have the New York session. Okay. So actually the New York session started 30 minutes ago or 29 minutes ago. Okay. It's now 7 there, right? 7:30. Okay. So 7 is the high liquid New York session starting. This is the time with most liquidity happening. You have to, you don't need to memorize, like by practice, you'll just have know this, like it will be in your mind always. We have measures that like very high traded currencies like euro dollar, the dollar yen, the pound against the dollar. This is very high liquid, meaning a lot of transaction happening all the time. We have minor pairs, which when we say minor, we mean a currency pair which has no US dollar in it. Keep this in mind. US dollar affect 80% of the markets. Okay, it's global, but there is some major minor pairs like the euro against the pound or the Australian dollar against the Japanese yen. This is also very important currencies. We have some exotics. We don't need to speak about it in a very basic. Maybe later we can speak about something like this. So we need to know something like when you enter the market, you have to know this. What's the benefit of the broker? Why it's giving you all this like leverage and buy and sell? Why? Because it has some benefit from you. Even in your local exchange, try to get inside and buy $100. Then go out, go back in like 5 seconds and say, I will sell it. You will find the money coming back to you is a little less. We call this difference the spread. This is the difference between the buying price and the selling price. This is the charge that you pay for the provider of liquidity, which is the exchange, which is the broker. So you have to know this. Whenever you open a trade, you buy or sell, you will always find yourself minus a number. This number is the spread, okay? And there is ask price, which is what you pay if you want to buy, and there is the bid price is what you pay if you want to sell, okay? This is very basic, but you have to know. Leverage, we already spoke about. Very, very quick example. If you have $1,000 account and you have 100 leverage, meaning the $1,000 will make you buy $100,000, which we call the standard lot. This was the measure that you cannot buy less. But now, because of the brokerages, you can buy even 0.1, which we call the mini lot, or 0.01, which is the micro lot. I'll speak of this later when we open the MetaTrader. So when the price move, we name the smallest move a pip. This pip is the smallest move that the currency pair can move. Usually, in most currencies, it's the fourth number. So, for example, if you open the like the euro dollar right now to see how much it costs you, you will see it's around 1.0453. You know, 1.053. 1.0453. This 3, if it became 4, that's a bip up. This 3, if it came 2, that's a bip down. And this is the smallest a price can move. Okay, there is a fraction of bip. This is just fancy, okay? The real move is the fourth. This is with most currencies. But with the Japanese yen currencies, it's always the second after the dot, or the second fraction. For example, the dollar, the US dollar against the Japanese yen price right now is 149.77. You pay 194 Japanese yen to get $1.77 of it. So this 7, the last 7, when it becomes 8, it's a bip up. When it becomes 6, it's a bip down. 10 bips will move the other 7 to make it 8. So this is now 10 bips in the Japanese yen. And 100 bips will move the other, and 1,000 bip will move the higher. So this is the bip, or the smallest move. We have measures to buy or sell. You cannot just go buy and say, you know, I want to buy 253 euro. No, that's not available. You need to buy 1,000, 10,000, 100,000. From each one, you can buy multiple. You can buy too many lot, which is equal to 20,000 in your MT4, it will be 0.2. You can buy 2 micro lot, which will be equal to 0.02. So this is the measure: 1,000 and multiplied, 10,000 and multiplied, and 100,000 and multiplied. This is what we call the position sizing. So now I will skip all this and go quickly for analysis. Okay, so every one of you now should have asked themselves, like, man, how could I know what's happening? Prices moving up or down? How would I know? Right? This is the $1 million question. There is many ways, but you can summarize, or I will try to summarize it in 2 main ways: the fundamentals and the technicals. Imagine this. I'm telling you that Islam is like eating healthy. Every day he exercise. Every time he come work at time, or even before time, he always read. He look handsome. Everything about him is good. So what do you predict to happen tomorrow? Oh, very arrogant person. Just examine, okay? Just examine. He will go in time. He will look great. He will do, right? Because this is what happened every day. What happened right now is a fundamental. I know what will happen in the market. I'll give some time for question, because actually I'm not hearing you right now. So if someone is trying to speak, I will give time in question. Oh, my time is just running. I will try to quickly give some like important information: fundamental analysis and technical analysis. This is the main 2 schools of how we predict the prices. I was just explaining the fundamentals before we got this cut. It's like getting the information like about if you are buying or selling a share or a commodity or a currency. You try to understand what is the for example, it's a currency. So what's the economic status? What is there's 3 main things with the currencies or with the economies. It's the GDP growth, and the unemployment rate, and the inflation rates. This is very simple 3 things, 3 words, but it has a huge impact of the market. So the inflation rates, if the inflation is going up, the economy have to increase the interest rate to decrease it. So when actually we have news that the inflation is going higher, actually this currency go higher, because the market now forecast, anticipate what will happen. Remember this. Yeah, I'm about to finish, so I'm trying to give you some valuable information. Remember this. What's happening, or what happened before does not affect the market. What might happen is what actually affects the market. So if gold for the last 100 years was not valuable, this is not important. If for some reason we think that gold will be valuable tomorrow, so today's price of gold will go higher because we anticipate at the market that this tomorrow will be appreciated in price. So we go buy it. So buying and selling currencies and shares and everything is not about what happened. It's about what will happen in the future. So any data that come to the market will have one question. Will this affect the future? Yes. If yes, then the market will react. Okay. So inflation rates, unemployment rates, GDP growth, all these things. Actually, the economy goal, maybe you will make fun of this word, but the economy goal is to make you happy. Each economy goal is to make the citizen happy. It try to give you a job so you can live a good life. It try to decrease the inflation so you find the goods you want to buy in a reasonable prices. And it try to increase the GDP, the gross domestic production, so the whole country is growing. So this is why these things are important. But when the economy is not achieving these goals, it try to make some decision like increase interest rate, like decrease cost on business, try to do some things to make your life easier. And the market is trying to take advantage. Like you try to predict, this is the name of the game. You try to predict what will happen next based on what you have now. So if the market see there is bad news in the US, actually this is good news for the US dollar because we know that the Fed will not just sit there. It will try to do something. So this is fundamentals. Interest rate or inflation rate, unemployment rate, and GDP growth. If we have time tomorrow, I can speak more about this. So technical analysis, very, very fast. We have something that we call the Dow theory. I don't have time to go in all of this, but I'm just trying to summarize. This was a genius person who made this establishment of the Dow theory. He said three things. This is like the holy three principles he left. He said we don't need the fundamentals. We just need to know these three things. He said price action discounts everything. Give me a chart and I will predict what will happen in the future tomorrow. I don't need to know any fundamentals. Price action discounts everything. And the second is prices move in trend. When the price move, we see it up, down, like that. You always see like this. He said something that, okay, there is an up and down, but there is a trend. There is a higher high and higher lows. So this is an uptrend. There is lower highs and lower lows. So this random going up and down, it's not random. It's like a wave. It's like a trend. So you just need to identify this trend and go with it. So price discounts everything and price move in trends. And the third and most important, history repeats itself. He has some like things that we see, like footprints in that chart, that when we see again and again and again, some things happen, like the hidden shoulders, if you see it before, or any or the flag, like when prices go up like this and then become in the range for a very, very long time, we predict that it will go up again. This we call a flag. So price move in trend, history repeat itself, and price action discount everything. So this is for the technical. There is other ways, but I don't think we have time to do this today. So how we can benefit from all the things I have said? We need to know the fundamentals. We know when the news releases, the major news releases, like from some like 15 minutes, we had major news from the US, the jobless claims. This is in the unemployment category, because I told you there's three things in the fundamentals. So you will find like 12 indices for the employment. All of them is measuring. The NFB is measuring employment. The jobless claim employment. All of this is under the employment. The interest rate, the inflation, the CPI, all this under the inflation. So how we can do this? We can do this on a time frame starting from 1 minute to 1 month. We can analyze the market, try to predict buy and sell based on this. In the very few time I still have, I'll try to make something practical. And those of you who are applied to be with me tomorrow, we will do more of this. Okay. I believe that this will just need a real account to be applied on, but it's okay. Like now I'll just give you an example of how we can predict the move of the price. This is gold. My screen is clear. Everybody can see it. Can you confirm, please? Can you see my screen? Can you see the MT4? Okay. No? No? Okay, just give me a minute. Let me try to find where it is. You can't hear my voice also? They cannot hear me from the beginning of this starting? Just now?
Oh, we can hear you. Yeah.
Let me double check. My audio is working, actually. It's working fine. The screen is working fine. Okay. So what you see here is the 4 hours chart for the gold. Let me remove this. So, for example, for some reason, I opened just the gold chart. This is the thing we will have an example. And tomorrow, for those of you who will be with me with live accounts, we will do more of this. So I have now the gold prices. This, I will now be applying what I was just explaining. We will try to predict what will happen next in the gold, because this is 4 hours chart. We will not have time to see candles in 4 hours. Let's move to the crazy 1 minute chart. What you see here is the price moving, and this black line is the moving average. This is the average of the prices of 21 candles divided by the 21. So 21 closing prices divided by 21. And this is the RSI. The RSI simply tell you where there is a buying pressure. We see it down here. Where is selling pressure down here and buying pressure here. So for this chart now, I can buy gold. So let's buy gold. Okay, what I open now is a standard lot, one lot. The gold price you see here is $2,935 per ounce. This is the price for 1 ounce of gold. Ounce of gold equal to 31.1 gram of 24 carats. This is the actual price of gold. If you go to your local store and buy gold, this is the actual price. Of course, it divided to get you the value of carat you buy. If you are like buying 21 or 18, it will give you the price. But this is the price of the ounce. So why did I buy here? For example, I have a strategy. This is just an example, okay? You don't take this as a trading advice. I'm just giving an example, okay? And this is a demo account. So from this RSI, I had the very selling pressure. I anticipated that the market can now reverse going up. And there is a very strong move actually in the downtrend. So a trend follower would actually not buy here, he would sell. A trend reversal would buy. And that's what we did right now. I'm simplifying in a very, very fast way a strategy or how you can decide. This is just technically. Fundamentally, we have a lot of information about gold, like there is these things that happening in the Middle East. Whenever there is conflicts, whenever there is war, or even the possibility of war, gold will go up. Okay, we call gold the safe haven. It's what you go to buy when you feel things are not going good. So that's why we see gold are an all-time high. Actually, today we had. Let me go to the 1 hour. We had the all-time high, which is around like, wow, it was like 53 or something. This is all-time high. We are witnessing history right now. So someone would say like the trend is going up. So I just follow the trend. I would just buy. Okay. And or maybe this is the last thing we can say about this trade is like, this is the low of the day. So I can buy here. I like put my stop loss like 29. You can see here how I did my stop loss. I bought from the 2,936.59 cents, and my stop loss is 2,929. So I have to put a stop loss in every trade. Yes, I have to, because I don't know what will happen. There's 50% in every trade that you lose. So you have to know when you will go out. Something else is missing here? Yes, the take profit. When I will go out from this trade with profit. If you leave this trade, it will only close in one condition, the stop loss. But you have to define a target. So I can put my target as my high of the day, like 52. What you see here is a trade with a stop loss and a take profit. Now, this is a good trade. Is this a winning trade? We don't know yet. Until it hit a stop loss or a taking profit, we don't know. But this is a good trade, meaning I know what I'm doing and I'm doing it right. Let me tell you that every winning trade can be losing for some time. So if you just keep like, oh my God, I bought it, went down, I have to close it now. You see, green candle, red candle. See, this is what happened after we bought that. Like red, green, red, red, now green. You go crazy if you just wait candle by candle. Of course, this is a 1 minute chart. You can apply this a 1 day chart, 4 hour chart, whatever. So someone would be like emotionally connected to his trade. You should be treating your trade as a doctor. If you see a doctor like making an operation, there's a human being there. He's just cutting him and doing everything. If he thinks this is a human being, he wouldn't do it. He's just doing his job. This is it. I know what's the steps. I will just do it and leave it. That's what you should do. You should treat your trade as if you are a doctor with a very cold nerve. I know this is hard. I know you are greedy or fear. Me too, actually. You should use your fear and greed. You should fear that if you don't put a stop loss, your whole account will be wiped. You should be greedy to stay in a trade with a little profit because you can get more. You still have a target there. But if you are lucky enough that the trade go in your favor, you can trail your stop loss. For example, this trade I opened at $2,936.59. And my target is $2,952 per ounce. So this is like $16 per ounce. If this moves $6 in my favor, I don't want to see this a losing trade anymore. I can move my stop loss into the break-even point, meaning if the price moves $6 from here, it will be around 42. So I will move my stop loss to 2,937, meaning the worst case scenario is I will win 50 cents. 50 cents per ounce. This is a one lot, which equals to $100 per dollar. Each dollar that the ounce move, I move with it $100. Okay. If any one of you now is looking to the number of profit or loss and saying like, oh my God, just close it, man. Are you crazy? This is hundreds of dollars. You will never see big profit if you just close the small profit. If you only close it when you see like a little profit, you will never see a profit. You have to wait. You have to be like a hunter. You have to be like an eagle. Wait until the moment you have defined before you start the trade. I took a lot of your valuable time, so I have to wrap up here. I will have like a minute for questions if someone has, and tomorrow we'll continue with those who have the ability to open a real account with us. So if there is any question, I'll be more than happy to receive it. There's the thing. I cannot see the chat. If someone is, can you tell me if someone is asking me?
US-Russia negotiation on the Ukraine affect the market?
Sorry, I couldn't get.
The comment
Huh?
Fahim says, how does US-Russia negotiation on Ukraine affect the market?
Okay, if I understood the question correctly, it's regarding the US-Russia and Ukrainian war. So, see, I'm not a very smart man, okay? I'm a stupid man. I like to simplify things. Man, war means gold go up. That's it. That's it. You don't need to think. War, gold goes up, okay? The US dollar is separated from Donald Trump. This is the second thing. Okay, first thing, war, gold go up. Gold go up. That's it. Nothing else can happen, okay? The second thing is you have to know that Donald Trump cannot control the US dollar. He has no authority. There is a man who called Jerome Powell. He's the chairman of the Fed, okay? The US is very different from all other government. It's like there's separation in power, in authorities. So we see every day Donald Trump is like let's just kill everyone. Like, whatever he do, he cannot do anything to the US dollar. The US dollar is economy. Donald Trump is just a president who has a limited authority in the US government. So I want you to detach your mind from whatever Donald Trump is doing. Focus on the Fed, Jerome Powell. Focus on the US releases, the NFP, the CPI, these kind of things. The war, you will never know about anything happening in war until it already happened. I'll give you a perfect scenario on gold. You are buying or selling gold, and suddenly you see like that, a candle like star going to the star. And then you hear there was some tank moving in the Russia borders with the Ukraine. You will hear after that why this happened. But always gold is working and going up with wars, and the chart is faster than the news. You will never know. So if you are waiting for news between what's happening, you will always be lagging the market. I would just be in the trend. Like if there is war, like now we have in the Middle East, these things happening. We are now having these things between Ukraine and also China with this like tariffs that Trump is doing. All these things are conflicts. Whenever conflicts are feeding gold. So I think gold will be continuing in its uptrend. But where you buy today, if you bought anywhere around the 30s, you are in profit, right? Unless now we are in the lowest of the day. Like the day started like 33, I think. So 33, around 33, you're already in profit. If you bought on around 50s, you are in loss. It's still an uptrend, but you got in the wrong moment. So I hope that this answered your question, and I will talk more about gold tomorrow. Is there any other questions? I'm sorry, I cannot see this chat. So if someone can tell me.
Yeah, can I ask a question, please?
Yeah, sure, please.
Yes. Can you please let me know what is the legal procedure for an international investor that he can transfer his money, or what is the legal procedure for an international investor? That there is something that he has to invest in dollar or something like that. That from a country like Bangladesh, what is the legal procedure for an international investor?
Okay, I'll give you a broad answer. Like globally, you are free to buy and sell currencies within your bank, like in physical currencies. Trading in Forex by itself, I think it's allowed globally. You can buy and sell through the electronic system anyway, but you might have difficulties in the transferring money methods. Like for example, in Bangladesh, I'm from Egypt, okay? So from Egypt, maybe it's not easy to transfer money to UAE by bank, but from UAE to transfer money to Egypt, it's very easy. This is just because the liquidity in the country you are in, but you will find another way. For me personally, if you have a Binance or USDT, this is the easiest, man. If you have any chance to get into this world, if you know how to use Binance and USDT, man, trading with it is like, it's the easiest way. Banks always have these difficulties in some countries. I know what you have been through. I told you I'm from Egypt, so I know. Here in UAE, it's the best. It's like very easy to transfer. But all over the globe, if you have a Binance, I think you can have Binance and buy. I'm not asking you to buy Bitcoin in the Binance wallet. I'm asking you to buy USDT, for example. This is stable, 1-to-1 currency, $1 equal 1 USDT. So use this. You can transfer to any person or any company. I urge you, if you don't know about Binance and your USDT thing, you find a lot of videos in your own mother tongue, your own language, that describe how to do this. I think my friend here can also tell you how to do it. This is the easiest. Maybe in your country, I'm not sure the bank transfer. I think the bank transfer in most of our countries is not like allowed, to be honest. But I think even if it's there, it will take time. So I encourage you, if I'm in your place, I'll just use USDT with the Binance. I hope this answers your question. If there is any more question, I'll be more than happy to answer it. Any more question we have? Oh, I took a lot of your time.
Hello.
I'm very sorry.
Yes, I have one
Tomorrow
question
we can
exactly.
have more time and more trading, live trading.
Okay.
Someone wants to ask
Can
a
you hear me?
question. Yeah.
Yeah.
Okay, please go ahead.
Right. So can you tell me, is this possible to transfer fund from another broker account to your broker account?
Yes, you can. And I will leave this questions to my good friend Mihari, because I think he would be like better than me. Man, I'm not the smartest, I told you. Like in your country, he know better than me how to transfer money, how to get it from another broker. He would help you with this. Okay, so keep you are already in the group, and he will be like answering all of your question regarding this. But my short answer is yes, you can. Any other questions?
Okay, thank you.
You're welcome. You're welcome, sir. So, any other questions before we end this? Okay, I think. Okay, so I will just end my part in this session. If you are having a real account, I believe there is a session tomorrow also. For those of you with a real account, I will start tomorrow, not by this like boring stuff. I'll just go ahead and open the MT4, and I will not give you like losing trade like this one. I'll be giving you a real winning trade. Just kidding, okay? We will just be speaking about how to approach the market, like practically. When you open your laptop or you open your phone, I'll be guiding you. You have to have a map in your mind. I'll give you this map, but I will not give you something like do what I do. I will tell you how you design your own, because actually trading is different with each person. It's very subjective. What you do, you might be, and I'm sure most of you are better than me as traders. The only good thing about me is I know that I'm not a smart person. So I avoid the stupid mistakes because I know I'm stupid. So when I see something that doesn't look very smart, I don't do it. Like risking my whole account in one trade, like opening a trade without a stop loss. This is not very smart. So this I like to avoid. So I will speak more about how you, just quick example. Some people doesn't like the stop loss. So I tell him like, man, if you have issue with the stop loss, make the margin is your stop loss. And instead of opening the account with the $3,000 you want, open it with just the $500 because you like risk, okay? To just decrease the amount, or vice versa. Or someone, he doesn't like to see small numbers. So I'll tell him, put the amount, you don't trade with the whole amount, but put amount like you have like $10,000 and you trade as if you only have 1,000. So you feel you are protected when you see the fluctuation of market. This is the kind of things we'll speak about. Also, we'll speak about how to make your own strategy, because there is a lot of ways to approach the market and make your own strategy. This and also more we'll speak about tomorrow. Thank you for your time.